Alright, good evening everybody from this hour. This is 11:23 Nigeria time, wherever you're watching me from. Good evening. Yes, I promised in my WhatsApp group this morning that I will be dropping another video about the pros and the cons of the Ifvg. Yes, no matter how beautiful, how perfect and Ifvg is, there is always a time that you may not always get it right, no matter how hard you try. But what makes a setup a good setup is the fact that after you must have spotted about 5 or 6 trades, and out of the 6 trades, you are able to win 4 successfully, or you lose 2, or you lose 1, and the other one becomes what you call maybe you close that one in a break even. So that makes that setup a very profitable one I can recommend to anybody. All right. So this trade is already running. This is a volatility. This is a volatility 150 IS. This is 4-hour time frame. No, this is 4-hour time frame, and it has been running since yesterday when I dropped it on my Telegram group, and up till now it has been good. It has been good. It has run over how many pips now? How many pips has it run now? Let me think. So far so good. Let me check. So far so good. It has run over. Let me see. Think sorry. Try run. Pips now. Okay, I'll check the pips. I'll check the pips, but so far so good. I think it has run over 270 pips already. Alright, so now, like I told you yesterday, it was a follow up to one of the video that I dropped yesterday that has to do with the power of Ifvg part 1. If you want to know what I'm saying, you can go there and watch it. How this trade came about. This trade has been dropped since day before yesterday, so it got to a point I took profit, and yesterday again I retested my point of entry and I entered another one again. So it is still running. It's still running. You can see the entry point is from here. The entry point was taken from here, alright, and it's still running. And how did I come about the entry? I think I took it from the daily time frame. I took it from the daily time frame, 4-hour time frame indeed. 4-hour time frame indeed. But meanwhile, I took my I took my bias from the daily time frame where we had a liquidity sweep, because when an external liquidity has been swept, the next thing that it will target is the internal. And how do we call this the external liquidity? This is the external liquidity because the overall trend of this movement is bearish. So any liquidity that resides here, like here, this is another liquidity, are all internal because the trend is already bearish. Alright, so any other liquidity that does not form within this bearish trend here, that is outside this location, it become an external liquidity. So here now, the liquidity that was taken here now is an external liquidity. A liquidity that was taken that created a break of a change of character here is an external liquidity. A liquidity that was taken here now is also an external liquidity. So now that the external liquidity was taken, we are now aiming at the internal liquidity. And one of those liquidity could be this fair value gap. This fair value gap could be one of the liquidity which I know that this market might reject it. This market might be rejected from here. Okay, so for the fact that this one is an external liquidity, and we're not going to hold this trade too long. Maybe at the end of this video, I may take profit here, right? I may take profit here, so that because at the end of the day, there might be a pullback to this point, but I am not certain because I cannot force this trade to continue going bullish when it is obvious that the whole trend is bearish. Alright, so this is the counter trade. So a counter trade is not a trade that you should hold for too long. Otherwise, I would have decided to hold this trade to get to this point. But it is not advisable professionally. When you are trading against the trend, it is not advisable to hold it too long. In fact, I hold it enough, which is okay for me to take the trade. Maybe I should even take the trade right away. I have to take the trade right away. Let me close this right away before I continue this trade. I mean this thing. I think I should trade the trade. Come on. Let me take the trade. Let me close the trade. Let me close the trade. So okay, I'll use my listing to close the trade so that I won't allow this to TP. I will not allow this to take much of our time. Maybe I'll take it from my phone. All right. So now that was a daily time frame. Daily time frame has telling us that okay, has told us that a liquidity has been swept. So and on the 4-hour time frame, I saw a pullback. After the pullback, it created a double bottom, and after that double bottom, before the double bottom was created, there was this fair value gap that's supposed to have pushed the market to go back, but unfortunately, it will not put the market it does not put the market backward for the pullback to continue. It broke with this red candle. All right, it broke with this red candle. So once it is broken like that, and we know that this trend is a bearish trend, it is expected that as the market get back into that zone with this bullish candle, which my indicator is calling it as a bull cross, we expected the market to drop down, but it could not drop down. It also closed above the Ifvg, making it to become an Ifvg, which is inverse fair value gap. So now returning it to that place, we'll call it a reclaimed fair value gap or an inverse fair value gap. And that was the reason why I see this trade as a potential buy. Understand? And I bought it, and it had been buying for the past how many hours? 1, 2, 3, 4. 4 times 4, that is 16 hours. Over 16 hours it has been buying. So in this case, I think it is right for me to close the trade before I continue. Let me close this trade with this little profit. Let me close this trade now. I'll close it and you will see how it's being closed. That is with $18. I'll close it with $18. Small money. Well, I'll close it. Gone. Second one again. Gone. Alright. So I close this trade. This order is going to disappear right away. All right, so that is it. So I'm expecting it to I'm expecting this trade to drop from here. Then apart from this, there's another trade that I took yesterday that failed, which is volatility 75. And I said because no, like I told you earlier, it's not all the trade that we took. It's not no matter how perfect, no matter how perfect is your what's it called? No matter how perfect is your strategy, there are times that it will fail. All right, it will fail. So look at it. Look at what happened. Look at what happened. It took me out and it returned to my point of I returned to my point of entry where I enter where I confirmed the entry yesterday. Okay, now this is a daily time frame. You know, this is a daily time frame, and in this daily time frame, we already have a bullish a bullish order flow, and then there was a break, a change of character here, and in this change of character, there is this bearish candle that dropped here, which sometimes I think we call it a liquidity void. So a fair value gap, I mean a fair value gap was created. So this fair value gap that was created on the daily time frame was supposed to reject the market from here downward, but unfortunately it broke above it and closed here. So indirectly, since it has closed here, this fair value gap need to be claimed. A fair value gap that was supposed to drop the market from here did not drop it, it closed above it. So as it's coming back into that area, we're supposed to expect the buy up before it dropped down. But when I got down to the 4 hour time frame to check what happened there, I discovered there was this thing. Okay, maybe I should go to the what's it called to the trading view so that you guys can see this thing properly. Let me go to the trading view. Volatility 75. Volatility 75. Okay. Okay. So this is what I am seeing. This is uh, this is the fair value gap I'm talking about here. So this fair value gap was created with this order flow, and it's expected that this should drop it down like this. But unfortunately, it went up and it broke above it. So as it broke above it, now it means that it has been force violated. So as the market dropped down into that area, we expect it to go up like this before dropping down. Understand? So which is what I envisaged yesterday. But unfortunately, it took out my my stop loss before it started going my direction. So how does it happen? I want you to understand. So you will know that sometimes you can do your best, but at the end of the day, the market will still do the worst. You cannot control the market. You can only control your strategy, you can control your emotion, but you cannot control the market. Excuse me. You cannot control the market. So I did all I could to win that trade yesterday, but unfortunately it couldn't work out. So that was what happened. This is the fair value gap. This is the fair value gap. So getting down to 4 hour time frame, I saw a bullish got into the fair value gap. Okay, you can imagine. Imagine what gave me the confidence to sell from here yesterday wasn't given here. So sometimes the trading view present a slightly different algorithm than that is not the same thing as that of MT5. But what we do, we'll still manage it. Okay, look at it now. This is the 4 hour here that gave me the reason to buy, because this 4 hour has created a sweep of liquidity. This is a sweep of liquidity. This liquidity was swept by this bullish hammer. And once the liquidity has been swept by this bullish hammer, you don't even need to, sometimes you don't even need to reconsider any other thing than to place your buy and start to ride on. But at the end of the day, I even went back to my 15 time frame to check whether there is a break and retest, and which I found it. This is the break and retest that gave me a reason to sell, to buy. This break and retest, break causing a change of character, breaking this after this break of structure. There was this change of character that left this fair value gap. I left this fair value gap where I took my trade from here and then drop my SL around here, expecting the market to take me here. But unfortunately it dropped down. So my analysis was okay, but at the end of the day I still lose the trade. So once this happened, please don't blame yourself. You have done what you're supposed to do, but at the end of the day it doesn't work out well. It is not your fault. Market cannot always go your way at all time. Understand? Market cannot go your way at all time. Sometimes it goes against you. That does not mean that your strategy is bad at all. Your strategy is not bad. Alright? So this is one of the video that I want to say I will drop for you. So an inverse fair value gap is very, very important. Very good. Very good. If you have any question to ask concerning this, let me know how to go about it for you to have to catch a very good entry. Any other question outside this, I am available for your response. I will respond to you at any point. And if you need more information about how to be profitable, how to go about forex, you can do well to DM me or drop your comment in the comment section, and I will attend to it. So thank you and have a pleasant weekend.